will call the meeting to order. Good morning and welcome to the June 8th, 2022 Executive Committee meeting. We acknowledge that we are in the traditional lands of the Treaty 4 territory, a treaty signed with 35 First Nations across southern Saskatchewan and parts of Alberta and Manitoba, and the original lands of the Cree, Saulteaux, Dakota, Nakota, Lakota, and on the homeland of the Métis Nation. The City of Regina owes its strength and vibrancy to these lands and the diverse Indigenous peoples whose ancestors' footsteps have marked this territory, as well as settlers from around the world who continue to be welcomed here and call Regina home. Some members of the committee and city administration are attending the meeting today through video conferencing. I would like to remind those members of the following. Please ensure your video camera and microphone are turned off. If a member of committee wishes to speak, use the raised hand function to be placed into the speaking queue. When speaking, remember to unmute your microphone and enable your video camera, and all votes will be conducted with a recorded vote. Records will be considered by City Council at its next scheduled meeting for June 15th, and the deadline to register as a delegate for the City Council meeting is 1 p.m. on Thursday, June 9th. Before we go any further, I'd like to call on Jim Nickel, acting city manager, to make our interim city manager to make an announcement. Mr. Nickel.
Thank you, Deputy Mayor. Just wanted to bring to the attention of members of committee the newest member of the Transformation Office team, and that would be Ms. Louise Usick, who is sitting there in the member of administration desk. And with your indulgence, Deputy Mayor, I would just ask that you provide or allow Louise to say a few words about her background and the focus of her new role, because it is going to be something that's very impactful to us moving forward.
Hi, everyone. Like Jim said, my name is Louise Usick, and I'm working in the Transformation Office. It's a pleasure to meet everyone. I recently came from the provincial government for 16 years. I was at the Ministry of Finance and the Ministry of Labour Relations Workplace Safety before I was working on a big transformational project for the replacement of the new MIDA system that carries the financials and human resources and procurement system. So I'm really looking forward to this new job. My role will be to work with corporate strategy and to really build a culture of service and performance within the city, building an innovation strategy, and really another one of my responsibilities will be to work with change management for the new CRM system that's going to be coming out in about a year here. Thanks.
Thank you and welcome. Can I have someone move a motion to approve the agenda? Councillor Shaw. I will call the question. Any opposed? Carried. Can I have someone move a motion to approve the meeting minutes from the meeting held on May 25th, 2022? Councillor Hawkins. Any errors or omissions? I will call the question. Any opposed? Carried. We will now consider item EX 22-73, 2021 City of Regina Annual Report and Public Accounts. Can I ask Barry Lacey from the administration to introduce the report?
Yes, thank you. Through you, Deputy Mayor. So first off, I'd like to introduce some guests that we have with us here today. So with us today, we have our external auditor who audits our financial statements as well as the financial statements of our related entities from M&P. We have Clayton Varish, who is the partner from M&P on the file, and as well Connor Bloom, who is the audit lead on the audit of the city's financial statements. Before you here today is the city's draft annual report for the year ended December 31st, 2021. And the annual report describes the corporation's service efforts and accomplishments both from a financial and non-financial perspective. As well, before you is the draft 2021 public accounts. And the draft public accounts describes the major expenditures of the city, in particular a summary of city council remuneration and expenses, grants, employee and remuneration expenses greater than $50,000 or more. And that's not only for the city of Regina, but also for the city's related entities. I use the word draft because these two documents remain draft until council formally approves them as part of your authority and responsibility, which we're recommending occur at the next meeting of council on June 15th. With that, I would like to ask Ms. Schmolenberg, who is joining us online, to walk through and at a high level provide the highlights of the annual financial statements that are a key part of the annual report. And upon her conclusion of providing that high-level overview, we would open it up to questions of either ourselves or of the city's auditors, M&P. You could direct questions to either of us as you choose. With that, over to you, Ms. Schmolenberg.
Thank you, through the chair. Thanks, Mr. Lacey. Good morning, everyone. Today, we're just going to do a quick walkthrough of 2 of the pages of financial statements. If you're following through in your package, it will be pages 61 and then 62. Starting with the consolidated statement of financial position, often referred to as the balance sheet. The first category is financial assets. 2 of the items I'll draw to your attention are cash. Our cash balance ending 2021 went up 73 million. The second item, short-term investments, went down 40 million. These were both for the same reason. This is a planned activity to liquidate the city's assets in advance of an investment strategy and a new investment manager that has started so that we can optimize the investments for the city. Those are the 2 main items that contributed to a $48 million increase in financial assets over last year. Financial assets in a positive balance and an increase means that we have the ability to meet our financial obligations. The next section is financial liabilities. There are a few items I'll draw your attention to here. Bank indebtedness, this is the first time you'll see this item. The $1,721,000 is a line of credit approved by the city to support Regina Exhibition Association Limited in running their business. Next is accounts payable and accrued liabilities. While this is up $17 million within a 5-year trend, this is within the normal range and is indicative of recovery from COVID. The third item is taxes payable to school boards. This went down $10 million. And again, this is a COVID item. It was a planned addendum to change the timing of when we pay our taxes to the school boards to more closely reflect when the city was receiving those funds. Dropping down a few lines to the long-term debt. Our long-term debt went up $39 million, and that's due to the Buffalo Pound water treatment plant expansion. Those are the main items that contributed to an increase of $45 million over last year for our financial liabilities. The combination of the financial assets less the financial liabilities gives us a net financial asset balance of $78,182,000. In public sector accounting, this is typically referred to as the net debt measure. This is a very important measure in public sector accounting of the health of an organization. At the City of Regina, we don't have a net debt. We have a net financial asset position, which shows that we have paid for the decisions that we already made. And while $78 million is a marginal amount, it does show a positive surplus there. Under non-financial assets, the one item that I would draw your attention to are tangible capital assets. These are investments such as roads, buildings, and other infrastructure. That increased by $83 million up to the balance you see of $2,477,965,000. And those are assets that we can use to provide service capacity to our citizens. Bringing us to the bottom, the accumulated surplus. As compared to last year, our accumulated surplus went up $88 million, most of which is those tangible capital assets. Turning over to page 62, the statement of operations and accumulated surplus, commonly referred to as an income statement. I'll draw again just a few items from each of the revenue and the expense portions. In the revenue, the first item I'll draw your attention to are fees and charges. Fees and charges did increase over 2020 by $28 million. This is still low if you looked at a 5-year trend, and this shows partial recovery from COVID, with a significant piece of it being economic recovery of Regina Exhibition Association Limited. The next item that was somewhat significant is licenses, fines, and levies. That was up a little over $3 million, and that was contributed to traffic violations. Dropping down to the bottom of this section, the second to last line is the contribution of tangible capital assets. When our developers develop subdivisions and neighborhoods, they develop parks and other infrastructure. At the end of the development and upon approval of the city, it's turned over to the city, which means we have those assets into the future, but we also need to maintain them. Those are the main items that contributed to an increase in our revenue over 2020 of $52 million, ending at $748,589,000. Going down to our expense section, there are 3 items I'll highlight here. First, parks, recreation, and community services. This is up $18 million as compared to 2020. Again, this is still low as compared to 2017 to 2019, and this is again an increase due to economic recovery after COVID. The next item is water, wastewater, and drainage. This is up $10 million, mostly attributed to a hot, dry summer. That meant that we purchased more water to provide to our citizens. As well, we did have water main breaks due to the drought, which had to be fixed. The last item in the expenses that I'll highlight is the roads and traffic. Well, roads and traffic were up $15 million. If you look at the budget line, you'll see that we're very close to the budget, indicating that this was a planned investment in infrastructure. That contributed in total between the revenues and expenses. Down at the annual surplus line, you'll see that we had an annual consolidated surplus of all of our entities of $88,491,000. And at the bottom, the accumulated surplus, which is up $88 million to our ending total of $2,541,145,000. Again, most of that increase of $88 million is the $83 million increase in investment in tangible capital assets. And as Mr. Lacey noted, you can now ask questions of administration or the auditor. Thank you.
Good. Okay, thank you. Can I have someone move this report? Okay, Councillor Bresciani. I'll open it up to you first if you have questions. Just one moment, please. Go ahead.
Thank you very much. So just in regards to, you talked about the accumulated surplus is 88 million. Can you just, I mean, that's a big number, but on the bottom when I read there, it's actually 4 million. Can you just clarify that?
Mr. Lacey?
So through you, Madam Deputy Mayor, sorry, I'm not sure where the 4 million, you're referencing is. Are we on schedule?
Sorry, Appendix B, it's accumulated surplus. It's under consolidated financials. It's got the accumulated surplus, includes both cash and non-cash, shows 88 million. This is related to the 83 million increase in tangible capital assets. It's building, lands, roads, etc. The city continues to invest in an increase in the net financial assets of 4 million. Can you just explain that through the chair?
Sorry. So my apologies, I'm just struggling to find the page here.
I don't have
Perhaps,
a page on this one.
maybe ask Ms. Schmolenberg. I think she's on the right page to walk through that.
Thank you. Through the chair, I'm still on page 61, but the net financial assets that you're referring to on the page that you're looking at, or if you go back to page 61, our consolidated statement of financial position, last year our net financial assets were $74,683,000. This year they are $78,182,000. The increase in net financial assets is the difference between the financial assets and the financial liabilities.
Okay, thank you for
And
that.
that is partial explanation for the 88. So the 88 million is almost $84 million of tangible capital assets, and the other 3 million-ish is the net financial assets, which indicates that increase in accumulated surplus is mostly intangible capital assets, and only about 3 million of it is actually a financial asset available to spend.
Okay, thank you very much. I guess the next question is to our auditors. Is there anything in this here that, red flags or anything that you think that as far as for the residents of Regina to understand that we're in good standing? Can you just, is there anything that you would like to add in regards to that through the chair? risks?
Thank you for the question. And through you, Deputy Mayor, so we've completed our audit in accordance with Canadian audit standards, and we believe that the financial statements fairly present the financial position of the City of Regina and are not materially misstated. So we're satisfied with the numbers, and I would offer that, as Ms. Schmallenberg pointed out, the net financial asset position of the City of Regina is indicative of a very strong financial position for a municipality. And so, I would concur that with her comments that that does bode well for the city in managing the resources it has.
Okay, thank you for that. And I guess just the last question in regards to on page between 44 to 47, just looking there, can I ask why the short-term investments have significantly dropped? Just kind of wondering if you can just explain why that is or give us an explanation. Thank you.
Mr. Lacey?
Yeah. So thank you. Through you, Deputy Chair. So some time ago, we moved all of our investments into short-term investments, basically GICs and other short-term investments. We have embarked upon a new investment policy that Council's approved that would position us to go out and contract with a professional investment manager that would invest our assets in a variety of portfolios, both short-term through to long-term, depending on when we need to access those funds. And so in preparation of transferring those funds to this professional investment manager, we've been redeeming our GICs at year end here, around year end. That's why you see a decrease in short-term investments and an increase in cash, because we are starting the process of divesting ourselves some of those short-term investments to turn over and provide them to the investment manager to manage as part of that investment portfolio. So it's just a matter of shifting funds from short-term to cash to eventually go back into other forms of investments that the investment manager will manage.
Okay. And I guess the last question was, and I just got to find it here. I will look for it. It was in regards to trust funds. So there are two trust funds that we have, and I was just reading. I'd like to know what they are, and ones that are like a zero balance, I think, when I looked at it. Can you just elaborate on those funds and what are they for? Through the chair.
Mr. Lacey?
Through you, Madam Chair, I'll refer that question to Ms. Schmallenberg to talk about our trust funds and the results of those, financial results of those two funds.
Through the chair, we have two trust funds, and I apologize, I'm just looking for them right now. One is the general trust, and what that is perpetual care. That is related to our cemeteries, a cemetery that the city runs, and as people use that facility, there is money that was put into trust, and each year we manage and maintain that. We get a return on investment, and that goes into that money. So that is in trust, that the city can only use it under very specific purposes for the perpetual care and the cemetery.
Thank you. Sorry, was there another trust fund as well? There's another one as well, through the chair.
There's general trust and then a perpetual care trust.
Okay. Sorry, and the perpetual care is what?
Is part of the general trust.
Okay. I'll find that in the document. I'll let others ask if I have further questions. Thank you.
Thank you, Councillor Brasciani. Next is Councillor Stephens.
Great, thank you. Through the chair. To administration, I'm looking at page 15 of the grants in the document. It's page 154 of the agenda. At the top of the list are several numbered corporations where they've received a general municipal grant or an operating capital grant. I was wondering if you could explain who those corporations are for and the purpose of this grant and expense.
Mr. Lacey?
So through you, Deputy Chair, I'll refer that question to Ms. Schmallenberg.
Through the chair, I don't have the specifics on those companies, what the specific ones are. So if there's a specific question, I will go back to the people that provide us the grant information and bring that back in a memo.
Through you, Madam Chair, I've just found that information. So the first numbered corporation of 101237333, Saskatchewan Limited, the operating name of that company is McDougall Golly. The second company, numbered company 102039004, Saskatchewan Limited. The operating name of that company is Havana. And then the third one at the top of that list, 130955517, Canada Inc. The operating name of that company is McKercher Law Firm.
Perfect, thank you. Follow up, it's on the same page. Boardwalk REIT Properties Holdings. I understand what the other grants are. I'm just curious about this one in particular. It's a private real estate corporation, and yet it receives a general municipal grant. Can you just walk me through that, please?
Sorry, through you, Madam Chair, I'll ask Ms. Schmolenberg to respond to that question.
Through the chair, I don't have specific information on all of the grants right in front of me, and unless Ms. Howden can grab that quickly, we'll need to get back to you on that one.
That's fine. Thank you, through the chair. The Mosaic has yielded a surplus this year. I noticed that the stadium reserve is in a deficit. Does that surplus immediately go into this dedicated stadium reserve, or would it go back into real for operations of the facility?
So through you, Deputy Mayor, so I'm assuming you're referring to kind of that two-page reconciliation that we have of revenue and expenses related to the stadium. And so, yes, that is the annual tracking of whether or not the revenues exceeded expenditures. And if revenues exceeded expenditures, the stadium reserve will, the overall reserve balance will increase in a positive way. And in years where expenses exceed revenues, that reserve will then go in a negative direction. So basically, it is the kind of an annual accounting of the inflows and outflows out of that reserve, with the overall goal being over the life of that stadium that reserve would be net zero or positive.
Perfect, thank you. This is a general question around professional services as they're accounted for in here. My reading is that the line item for professional services has gone up faster than actual labor costs at the city. So this is a big question, and I don't need you to get into details. Are we subcontracting or contracting out more work? Is the cost of those contracted services going up? Maybe just account for why we're seeing more of these expenditures in terms of total cost.
So through you, Deputy Mayor, perhaps I'll start by asking Ms. Schmolenberg just to speak to what would fall under that professional services expense line.
Through the chair, may I ask, I'm assuming you're looking at Schedule 2, professional services as in contracted and general services?
Correct.
Yes. Contracted and general services, as the name implies, you're correct. It does include all kinds of professional services, which would be things like auditors, actuaries. In regards to contracted services, it does include contractors, but a lot of those contractors will be people that build our roads. When we have buildings built, all of that is what goes into there. So it's a fairly significant piece, our roads, our buildings, and then, yes, professional services. I don't have any reason to believe or any information that says that we're increasing contracting out. I don't believe that that indicates a reduction of staff work. It just indicates that we're building more roads and infrastructure, and that's the number that you're seeing in there.
Perfect, thank you. Final question, when it comes to operational surpluses and deficits, the city has consistently run operational surpluses, and one indication here is our taxation revenue has gone up by some 7.3 million. So my first question is, generally in the field, what is an acceptable variance? We're dealing with, depends on how you slice it, revenue of some 748 million. When residents see a surplus, they're rightfully concerned either we've underspent or we've overtaxed. So generally in the field of budgeting, what is an acceptable variance with a budget this size?
So thank you, through you, Madam Deputy Mayor. So I just make a couple of comments here. First, the audited financial statements are prepared on public sector accounting standards. So they use accruals, et cetera. So depreciation shows up as an expense. If you build a road in a year, that expense doesn't show up in these statements, but the depreciation of that road does for that portion of the year that it was in use. So if you want to compare apples to apples, so to speak, against the budget, which is developed on a cash basis, the overall general operating surplus was about $6.5 million on, as you've indicated, a significant budget of close to $500 million. And so as an organization, our goal here is to have a balanced budget, which means managing to as close to net zero as possible. And so that's what our goal is. But obviously during the year, there are variances that come up, weather events that may or may not, as an example, impact how quickly some of the work can be undertaken that we planned for, and other unexpected things that we didn't plan for. So I think in short, I would just make two comments to the question that you have. $6.5 million in the cash-based budget is a little over 1%. I think if you can get to 1% or below 1% of your budget, you're doing a pretty good job. The other piece I would note that any surplus in the general fund goes to the general fund reserve. And so that money is still there for council's consideration in the future and how it wishes to use that money. And typically, you want to ensure that you have some of those funds in your reserve and you have a healthy reserve to ensure that council is able to, in a timely manner, be able to react to emergencies, things that happen that are expenditures that were not counted for in the budget, or to take advantage of opportunities we may not have been aware of in the budget, where maybe we need to find some extra dollars to take advantage of that opportunity. I would note that over the last couple of years, our uncommitted balance of our general fund reserve has been towards the bottom end of the recommended balance, or slightly below it. So I think with this slight increase of this surplus of about $6.5 million, when you compare apples to apples, I think should be reflected as having an opportunity to replenish that reserve to ensure that council is able to react to either emergencies or opportunities into the future.
Great, thank you. A follow-up to that. So if we're thinking about the $6.5 million surplus, can administration comment on what departments or services might be responsible for generating that? And I say that in the context of, from a resident standpoint, might be unmet service demands. So for instance, we had quite a bit of snow. Residents were rightfully asking for improved snow removal. We have a policy that guides it. But if I were a resident looking at this, I would say, well, maybe we should have amplified those services. Maybe we underspent. So can you comment on where those bulk of this surplus might be generated, if possible?
So, so that $6.5 million was primarily driven by two things. One was a slight increase in revenues of about $2.6 million above what we had budgeted for. And that was largely driven by a rebound in transit fares and a number of other fees that were previously impacted by COVID. So rebounded a little bit quicker than what we had anticipated in the budget process. And it was partially offset by a little bit lower property tax revenue we collected than what we had budgeted as a result of assessment appeals, and our investment income revenue is slightly lower than what we'd anticipated. So net overall, our budget for revenues was 2.6 higher. And on the expenditure side, we were 5.9 million less or thereabouts in expenditures overall, or in the 5 million range, sorry. And that was in part largely due to the fact that you might recall that we had taken active measures to manage COVID by putting a hiring freeze in place. except for essential positions. And so that carried over into Q1 of 2021. So we saw some salary lag in the first quarter of 2021. And those savings were offset by increased costs in some of our hardware and software servicing, as well as some of our security and janitorial costs, in part responding to the COVID piece on the janitorial side. So when you take those two together, you get to $6.5 million. And that number throughout the year obviously fluctuates as new circumstances come in, and we do forecast and we try to anticipate what changes we might see throughout the year, and as I mentioned before, manage as close to the budget as possible.
Perfect. Thank you very much. That's all I had.
Thank you, Councillor Stevens. Councillor Shaw,
Oh,
please go ahead.
that was quick. I expected to wait in queue. I'm not sure who to direct this at. I'm going to look into the library here and some of the expenses of the library. Would that be administration?
Sorry, just one sec. Go ahead, please, Mr. Lacey.
Yeah, to you, Deputy Chair. So the library is certainly consolidated into our statements. Any of the detail, we may not have here. We certainly can try without knowing the question as best we can. But I think with respect to the detail of the library expenditures, that might be something that we don't have. That would be typically the library board that would have that oversight there. But certainly any questions you have, we'll try to answer here, or we may need to follow up and respond at a later date.
Okay. So I just have a couple, so maybe we will have to, I'm not sure. Praxis Consulting, Stantec Architecture. What's the reasoning behind the money spent there? 70 and 64. It's on page 102 of the Appendix C. Account.
And maybe while I'm looking for it, if Ms. Schmolenberg has it in front of her, I'll ask her if she has any comment. Oh, here it is. So sorry, through you, Deputy Chair, what was the name of the company?
It's Praxis Consulting and Stantec Architecture. I'm wondering why money is spent on that. Is there a reason?
So through you, Madam Chair, we wouldn't have, I don't believe we have access to those particular details. If there are specific questions around that, we'd be more than happy to follow up directly with the library and provide that information to you.
If you wouldn't mind, please. I'm having a problem here. Brown Communication Group. The library is a communication. They have people that are hired to do communication, but yet they're spending $300. I'm just questioning this, and this is tax-paying dollars, and I'm not sure why. I'd like to know the reasoning behind some of these expenses.
So through you, Madam Chair, we can certainly follow up on those three items and provide that information to you after we've received that information from the library board.
I'll give you some more items, but we can talk about that.
If you could, yeah.
Yeah, okay. Thank you very much. That's all I have for right now.
Thank you, Councillor Shaw. I see no further questions. Okay, Councillor Sadenchuk, go ahead, please.
Yes, sorry. I was looking at the land inventory, the land development reserve. So I'm trying to understand just a little bit what's going on with that. So on page 15, the land development reserve was in a negative 16 million, and it's now a negative 23 million. And it shows, and then page 64 shows that it's a deficit, that it went from a positive 6.6 million to 4.7, a negative 4.7 million. So I'm just trying to understand what's happening with the land inventory and the land development reserve, because I'm sure that there's a very simple explanation that I just don't understand in terms of how the money moves from reserve and from inventory. So I don't know, it's on different pages, the different sections, but sort of like how the money's moved from one to the other.
Mr. Lacey?
So through you, Madam Chair, I'll start, and then I will ask Ms. Schmolenberg to add additional commentary, particularly with respect to the land inventory. So the land development reserve, what that relates to is our land development activity. So if we're buying land, you'll see that come out. You'll see if we're buying land, typically we would access that reserve, so that would draw the reserve down to negative. If we're selling land, the sale proceeds from that land would go into that reserve, which would have a positive balance. The negative balance here is largely being driven by some of our land development activity in the towns. And so we're making those initial investments to prepare the town properties with respect to servicing, roads, etc. And then once we finish servicing them, home builders then buy lots, which have revenues coming in. And so right now we're kind of in the investment phase. And so you are seeing a lot drawdown in the land development reserve. And our expectation is, and current sales and trending are supporting that, is that sales at the end of the day will replenish that investment we've made along with a return. With respect to the land inventory, I'll ask Ms. Schmolenberg if maybe she wants to speak to that number.
Thank you, through the chair. There are actually 3 different items that are in that land inventory balance. Some of it is properties that are acquired through the tax enforcement process. When someone does not pay their taxes, the city will take it over, and that is recorded at the lower of cost and net realizable value. That's part of the piece that's in there. Then there's land that is sometimes acquired through another process and held for resale. Because it's held for resale, we have it up there in the financial asset section. And the third piece, and the biggest part of it, is that we are developing in phase 2 development of the towns. And as we develop that, there are expenditures that are incurred, but as those expenditures are incurred, they're capitalized into that land inventory and held there for resale. And as Mr. Lacey correctly stated, as those properties are sold, that's when they will contribute to the revenues in the land development area, and that will contribute to the reserve that you're seeing.
Okay, thank you. And so then a follow-up, we have the potential of seeing some land purchase options happening this year. So would those funds go into the land development reserve?
So
Through the chair.
Yeah, no, through the chair. So thank you for that question. Maybe just back to the other question, because there is kind of an inverse relationship between the two. So as we develop the towns, you'll see the land development reserve go more into a negative position as we draw funds, but you'll see the land long-term inventory of land go up because that's being invested into the lands, which results in a capital item on the other side of the balance sheet. And then as those lands are sold, you'll see that land reserve balance go down, and you'll see the reserve balance move into a positive position. So it's kind of an inverse relationship between the two. I just wanted to make sure that that connection was made.
Okay.
With respect to the question with respect to some of the option agreements we have out there, that yes, the sale proceeds from those option agreements would go into the land development reserve. Council might also be aware, however, that we're going to make some investment into those lands with respect to bringing water utility services in. And so as the land developer of those lands, once again, we'd be drawing upon that reserve to fund some of those investments.
Okay, no, thank you very much for that.
Thank you, Councillor Stadnichuk. Mr. Nicol has something he'd like to add. Go ahead, please.
Through you, Deputy Mayor, only if questions are done, I just wanted to add something to what Mr. Lacey had said in explanation to the question from Councillor Stevens about a surplus. What we need to keep in mind, and this is primarily for members of the public, the City of Regina as every other municipality in the province, cannot run a deficit. If we can experience a deficit, but then we will immediately have to draw that money from the General Reserve Fund, which Mr. Lacey has already indicated in the past has been dangerously low on the minimum balance. So it's just something to keep in mind. We try very hard to not overtax. We are always looking to make sure that we're as close to that projected budget as we can. I think it's kudos to Mr. Lacey and his staff that we hover around 1%. And I think it's also fair to say that whenever we have a 1% variance, we want it on the positive side. It doesn't mean that we're overtaxing necessarily. As Mr. Lacey explained, there's lots of variables that go into this, but it's important that the public understand that we cannot legally budget for a deficit. So it's not like the province or the federal governments that can go out there and run huge deficits. And I think sometimes that gets overlooked by members of the public.
Thank you, Mr. Nicol. I don't see any further questions, so I will ask the mover of the report, Councillor Bresciani, if she would like to close off debate. Sorry, I just have to count. No, you're good? Sorry, just one sec. I don't have your mic on.
I want to say thank you to administration for all the work that you've done on this. And every year it seems like it's getting a little bit easier to understand. It's a full document that I wish more of the general public could dive into, just to get a good understanding really of how we're doing as a city and all the things that we balance. So again, thank you for that. That's all I have.
Thank you, Councillor Bresciani. Okay, I will ask the clerk to start the vote, please.
Through you, Madam Chair, the motion carries 10-0 with Councillor Mole absent from the meeting.
Thank you. Can I have someone move a motion for a private session? Councillor Stadnichuk. I will call the question. All those, anyone opposed? Okay, carried.